Hey,
Good
Zoe.
morning, Ryan.
Good morning. How are you?
Great to see you.
Great to see you too. Tell us, see you, Prime Minister. Tell us what's going on with the market, Zoe.
Well, it's been actually a bit of a topsy-turvy week last week for international markets. And obviously we've been hit with the tariff news that we had come out on Friday. But heading into that, things were actually going reasonably smoothly with US reporting season continuing to deliver some pretty strong results, particularly from US tech corporates.
And those incredible results that you're talking about, a lot driven by AI, and the market's just lapping it up.
Yeah, look, and actually results are sort of backing it up as well, to be honest. When you saw some of the earnings reports coming through, Microsoft and Meta in particular, what you're starting to see, it is actually having an impact on their bottom line. So for a while, I think there's been this cautious optimism that AI is going to fuel a lot of growth and a lot of potential earnings revenue. And we have started to see some early signs of that coming through, which resulted in a pretty positive stock market reaction for several of those companies last week.
We've, of course, got our unemployment figures coming out this week. What are we expecting? What are markets looking for?
Yeah, so look, unfortunately, the unemployment rate tends to be a bit of a lagging indicator on the economy, and it tends to be one of the last things to turn. So we are still looking at unemployment heading north towards 5.3%. Now, look, that's a long way off the lows that we've come off during the peak of COVID, where we had, massive labour shortages, where the unemployment rate got down to a record low of 3.2%. But actually, when you look back through history in the scheme of things, an unemployment rate of 5.3% is almost just above average of actually where things have trended over the last 20 years. That said, obviously, it is still really tough out there, and we are seeing that come through in some of the early indicators. So it is likely that the employment market still remains a grind for a lot of people. We are expecting employment to slow, and it's unlikely that that's going to start really improving until we get into 2026 at this point.
Yeah. So appreciate that. Thank you very much for the update. Zoe Wallis, investment strategist. We talk markets each week thanks to our partners, Forsyth Barr.